Hey, what's up, guys? Can you hear me okay? Hey, great. Good to see everybody. Hope you all are doing well. And again, I say it every time, but I see a few new faces. I know for sure it's Annie's first time. So welcome. We're grateful to have you, and hope you learn a ton from us, or at least learn something. And again, don't be shy, Annie, even if it's your first time. And there's been most people here have been to so many that they're more apt to jump in and ask questions. But really, again, we want everybody asking questions. And I go over a variety of topics. I like to hit a little bit of everything here. I don't really have anything planned at all today. I'm really just still holding one trade that I emailed out weeks ago. The markets have sort of tightened up a little bit here, which is, again, good and bad. For me, it's good because I think there's a lot of good things coming. I have a lot of things on my watch list, and it's just a matter of being patient. It's bad if some of you are over trading and getting chopped around a little bit, which tends to be the case. And, again, I always see those themes in my inbox. When the markets are trending very hard, people are upset they're missing moves, and the markets are chopping a little bit. People are telling me they're taking a lot of losses. So again, it's really just a balancing act of your method. And for me right now, it's just a matter of setting my charts up. And again, there's a lot of good things out there. So at that point, it's really just a wait and see game. And I just manage my current trades, and that's really the process I go through. And I see Piposaurus is back. And a few older names, Rock Rat. We were just joking around here. I've known a lot of you guys for a long time now, about a decade, which is really crazy when you think about it. But Pip was saying that trading is really boring, and it's really trading is doesn't ever, I don't say, get boring for me, but it just becomes sort of you have your routine, and I've been getting a lot of emails lately. From some new people and some old people about that routine itself of, what am I looking for when I sit down at my charts, or what's my mental thought process, and what's the mental state of mind I get into. And I mean, I'm just being honest when I say this. And I posted a little audio clip a couple weeks ago about this. It just that there's not really this crazy mental thought process anymore. And I'm sure Pip and Rock and a few others will attest to this, that you just follow your routine, and you just you're waiting for the opportunity, you trade the opportunity, you try to do your best with the opportunity, and you're on to the next one. So hopefully for some of you newer folks, that this is a little bit more cumbersome right now as you learn the concepts and you try to integrate those concepts. And believe me, it is, and it will be. That your goal should be towards working towards that, where you're sort of just centered and focused on just doing your best and most logical thought process for the trades you take. So again, that's my little mini rant. Pitt was looking for a few of them, and with that, I'm just gonna jump into it, guys. Again, ask anything, any questions, any concepts. We can go over my charts, your charts. Again, we'll jump around here. So I had two questions, I think, or three, if I can find it. I know Dan had a question. I don't know where it is though, but I know it was on a stock chart here on CIE. Was it, Dan? Okay, here it is. So Dan said, my only thing I have a question about this week, Mike, is the stock CIE. So let me pull that up. Okay, let me drag it over here. All right, here's CIE, guys. So again, for some of you new folks too who maybe found us through Forex only, again, hopefully you guys realize Forex, futures, stocks, it's all the same thing, okay? If you can find a chart that respects technicals and you're going to be able to do that visually, you can trade it. So don't be scared off if you see us speaking about stocks or futures or whatnot. It's all the same thing. It's a very universal thing that we do, and that for me is one of the biggest edges that my method gives me, is that I'm able to look at so many markets. So again, I'm always telling people, the more the merrier. I know some of you will focus in on a few things because that's what works for you. But again, don't be scared off just because you see an equity chart. So Dan said it already has found support around $9.70. This looks like it's ready to break the high of the bullish outside bar. So here's the bullish outside bar that Dan's looking at here on CIE here. So again, we can see we're near a little bit of support over here. Again, we can see some previous support, Overall, for me, you know, what I see when I look at this chart is just price in a box here, right? So very simple box. We have the resistance and the support area. And again, we can see us boxing really near another box here. So not all that surprising here. Again, you can see this bullish outside bar, you know, testing the lows here, closing above this midpoint, right? Pulling back to that midpoint, which it's doing this week, and trying to break to the upside. So there's, you know, there's really your standard good and bads with this type of setup here. I generally, you know, this setup here, just not strong enough for me personally. Again, I'm just, you guys know, I'm just a little bit pickier with the things that I look for. But in a setup like this, it's really actually really simple. If you like this situation enough, your buy is clearly at these bar highs, right? Which flip from the bar lows. And you're going to get your stop under this area. So again, if I was going to buy here, you know, I would probably have bought, I think, a little bit lower than this, Dan. I don't think I would have got triggered in here. It looks like it bounced right off that last high, but I like to go near the clustering here. So you can see that the 4-bar lows really cluster. We're right around here, around, say, 955. To me, that would have been a more logical, let me just put that on permanently here. So right around, let's say, 954 would have been a more logical entry point. So if price was just floating right now, as it is, I would be fine with leaving that buy order in there personally. But I don't love trading around the midpoints. So you guys know that about me. I'm not a huge midpoint trader. And when I say midpoint, if you take any box consolidation, any wedge, any channel, that midpoint is going to be a price pivot zone flip. So here's that support turning to resistance. So I just prefer to trade away from the tops and bottoms, or off of those tops and bottoms. I just find them stronger points of support and resistance. But this is absolutely a fine trade. And again, the key here is that your risk is small, guys. And that's what we've been focusing on, right, is that and I've been getting, every week now, I get a constant email or two or sometimes more of those of you really understanding that dynamic risk reward concept, that, as I call it. And that's why, again, I'm not going to judge this setup as bad. I personally would just want more confluence to this setup. You know, that just would give me more confidence in it. Again, you know, some of you might say, oh, there's a box over here. Well, let's say that this box high, right, lined up perfectly with, say, this midpoint. Let's say that box high really ended up underneath this area or something, right? And let's say that this box low was shifted lower, or this bullish outside bar ran through these lows. Again, I'm just looking to build more confluence to the story. And that, for me, is just a way of avoiding over trading, which is, again, when you get good at these concepts, you really will see trades pretty much all over the place. And really, when you get good too, you'll be able to even manage so-so trades and do pretty well, I would assume. But there's still that, you know, confidence factor you want to have with each of your trades. So again, this is not a bad setup. It's really just a matter of how you play it. So what most people would do, Dan, and again, I know Dan knows this, but a lot of new traders to the group would see this bullish outside bar, and they'd stick a buy right here above the high of the bullish outside bar, right? Because they're thinking the standard, listen, buy a break of your bullish outside bars, buy a break of your pin bars, and that's a good place to start. But the problem is, and what I would tell most new traders who sent me this chart, I would say, listen, you have a bullish outside bar that is kind of at a swing low, right? It doesn't really have a low underneath the low, but it's in a sideways market. So if you buy a break of this bar, you're basically buying into that resistance. And if you don't play that very tight, right? If you don't play that very tight, you're going to get yourself into trouble. You're going to get yourself into trouble because you're going to buy a break. Price is going to hit these bar highs. You're not going to want to take profit. You're not going to go to break even. Most people just do not do that because they're not, you know, at that point in their trading where they understand they need to, and they get themselves into trouble. Price turns back, and you end up taking a bigger loss, either a very big loss or a bigger loss than you should. And then it makes that next trade and the following trade just making up for that last trade. So if you're going to play a setup like this, there's only one place to buy that setup, guys, and that's on the pullback. Very simply, right? So I went over, you know, we've been going over every week, but I said, you know, one of the first things I'm asking myself when I see a setup I want to enter is, do I want to enter on a break of the bar? Do I want to enter on the close or the open of the next bar? Or do I want to find a retracement point? So there's three